Hi, this is Mark with my analysis for the week commencing the 31st of March. Now, I have recorded the video and done my analysis on Saturday. If anything is to happen on Sunday, if Trump comes out and says something more outlandish than usual, or if there's an incident worldwide or anything of major interest, then we may need to revise this plan and update it. But for the weekend, well, let's have a quick look at last week. Last week, we had some mixed news out of the US. Consumer confidence was down, and then GDP was down, and there was core price inflation, Chicago PMI. So actually, mainly it was negative coming out of the US. It was mixed for the New Zealand dollar. The trade balance came out much better than expected, although the previous months had been revised down somewhat, but not as much as this. It is only orange flag, and it didn't really seem to make much difference. But as you will have seen during the week, the rate statement, and this is why we warn you all the time, do not be trading around rate statement news. They came out and they said the next move in the RBNZ interest rates is likely to be down, and bang, the New Zealand dollar dropped like a stone for a while. Then you had business confidence is even worse. So a drip of negative from the RBNZ. Some of the Canadian news on Friday was better than expected, but there is a lot going on in the background with Trudeau and talk of corruption and government interference with the law. So all rather messy in Canada as well. Now for the week ahead, it is NFP week, so we don't trade Fridays anyway, and we definitely don't trade NFP Friday. On Monday, you've got important US news, and Canadian governor is speaking. Aussie, it's a big news for the Aussie this week, and it's their rate statement. So if the Australian central bank comes out and says that their next move is going to be down, then again that could see the Aussie tumble further and maybe break 70 this time. Once again, nobody's expecting the rates to rise. A cut would be a surprise at the moment. I think the general consensus is continued to be that they will maintain rates where they are at the moment. Annual budget release is obviously important for future guidance, and then they have retail sales on Wednesday rather. So it's all rather top heavy for the Aussie once again. Finally on Friday, you've also got CAD news, as well as I said earlier, non-farm employment, so it's jobs in the US and the unemployment rate and the average hourly earnings. And you will have seen in recent months that we get two bits of good and one lot of negative, and this is why we just leave it alone. So be careful, and as ever, tiptoe around the calendar for the week ahead. Let's have a look at some charts. So the euro continues to be stuck around 130. As I said last week, I wanted to pull back. I'm not interested in taking it down here because clearly it is struggling around 112. There's no great particular movement. If we get some kind of news, Brexit or another form of catalyst, then it could break. But at the moment, I want to pull back again, and I would start to be interested once we get back up to 1480. And up here, I know some of you are looking to trade this intraday, but as I say, I would much rather be interested if it gets back up here. Intraday, I wouldn't take here because 130 is just below, and there's quite a few pairs similar at the moment. And also look here, definitely wouldn't take it down here because it's a double bottom, only 40 pips away, and I've nowhere to place the stop. Aussie dollar, very similar. I said last week when price had closed here, I would not short in its current position. And the reason is that 700 is a huge area of previous support and resistance, and the whole number, and the probability was it would struggle to break because barring except this crazy move over Christmas, it has failed to break this area repeatedly. So again, I want to pull back, and this weekly channel is back up around 7180. And if I go onto my normal charts with everything on, 7180 here, I've got the 200 EMA behind it, the 78.6 fib as well. So I can place my order here, 7180, stop 40 odd pips above, and a potential move back down here of 140, 180. So that is of interest to me for sure for a forward order. Aussie yen, said last week, I would be interested intraday around 79.50. I would really be interested with a forward order back up around 80, 80.40. Aussie CAD failed to break this area here. It's stuck between these two EMAs. Last week I'd said I was interested at 95.70, I believe it was. Missed it by a handful of pips and the damn thing's gone. If it breaks and closes below here, then pulls back, I would be interested to short. New Zealand dollar, say we had the drop last week, we had all the big moves, and then I said to you during the week, I wouldn't short anywhere around 6,800, and the reason being it has stuck like glue to 6,800 for months and months and months, and every time it hits it, it bounces off, and lots of people will have started to sell here and promptly seen it turn back up again. So my plan is still short at the top around 6,900, and here I'm leaving it alone. Those wanting to trade intraday, maybe, but my issue is this 55 is in the way. So for a short, really, I would want it back down below here, then with a move. But my preferred area at the minute is to short at 6,900. Last week after the drop, this was the negative news. This was the rate statement news. Huge move for the New Zealand dollar. Where did it stop? Well, to the pip on a daily and weekly trend line. Now, as I said, if this was to break and close below, then I would start being interested. But at the moment, it's just stuck in here, and there are better opportunities elsewhere. This is the dollar yen. Said to you last week, I would not short. And think on, guys, half the battle in this game is getting the direction right. And I said I would not short it last week. My bias was to look for a long at 110. And the reason was that below it, there is too much support, and therefore the probability was if it did break, it would struggle here and bounce back. What did it do? Well, it bounced off 110 as expected, but equally expected, it has stopped at 111. It is stuck in this area. It was stuck in this area in January, and last year, from April to June. It is very tight. We really need a bigger breakout, up or down, and down, I would need it to clear this lot. So my bias is still longs, but don't be greedy with this. If you can grab some pips out of it, great, but don't be expecting huge moves, because unless or until it breaks out, then you just trade the ranges. Same pair on a daily, and you can see a little more clearly here. This is that 200 EMA. It's bouncing off 110, which is the weekly 200, and it's bouncing off the weekly 200 and the daily 200 and the weekly 55 here at the top, and that's all it's doing. As ever, keep your eye on the Nikkei for clues. The Nikkei started to break down, now it's started to go sideways. But if you're trading the yens, keep your eye on those. Euro yen, said last week, be interested. The best place for me, well, the real best place for me is all the way back up here around 127.50. But I am interested to short this at 126.50 as well. Singapore dollar. Last week we were looking to short this at 35.80. It missed by a handful of pips and dropped. I am interested this week. I am going to place an order at 35.80 to short, and I am going to place the second part of the order at 36.10. I usually go below the whole numbers, but there's only a small range on this. It's only 40 pips a day. But the thing is here, if you look at this, this is a huge, huge area of previous support and resistance. And therefore, if it's going to stop anywhere, the probability is it will stop here. If this breaks and closes during the week and it closes clearly above here, then all bets are off and we start to think of a long, and I will update you in Tuesday's live session on that one. USD CAD, longer term picture. This is a channel that goes back to 2017, and see how after Christmas it bounced off here to the pip again, and at 3,200 is the area for me on this one. I will be watching higher up for a potential swing trade back down, but again, this is another one. This is the last 4 weeks, it has been stuck in this tiny, tiny range. And that range is from the bottom around 32.70. So if you're trading it intraday, that's clearly an area of interest for a long. But my preferred areas I've just shown you is 3,200. It is major previous support and resistance horizontally. It is a major weekly trend line. We have the 200 EMA in place and the 78.6 fib. So anybody mention multiple reasons, that is clearly the place. The good thing then is you can either be aggressive and put your stop just below the 200 EMA and the whole number, or you can be more conservative and go 60 odd pips down here, but you're thinking this could go 5 times your risk. CAD yen, said last week, this is a head and shoulders pattern that Nita pointed out. This would be the neckline. I wasn't taking it down here. I would prefer this all the way back up here. I'd feel more confident, and I believe it's 78.6 fib as well. But obviously 83.30 is an area of interest, but not a forward order for me here. I would put the forward order here, and if that fails, I would take it again for definite up here at 8,600. Swiss yen. This was one we took the other week. It was a perfect setup, technical setup. It was 78.6 fib of the recent move and the trend line and the monthly 55 and the weekly 200, everything in its dog going on in here, and this dropped 145 pips. If it comes back up to this area, yes, we're going to be outside the trend line, but if it's going to stop anywhere, that will be the area. I'm interested to short it again at 111.80 this time. New Zealand yen, said last week it needed to break. It did actually make the break after the interest rate news. So you'd start to think of 76 to 7,700. The best area for me on this one, best risk reward, strongest area is a short all the way up at 77.40. But if you're trading intraday, watch in this area here. New Zealand CAD, I showed you in the video on the live session update on Wednesday, I think it was in the blog post, how Pierre and I had handled this. We'd hedged the position and it's explained in the video. This is Euro Aussie. I am more interested to short at the top and long at the bottom, but Nita did point out that this is currently in a channel and it has come down and bounced again at 5,800. So I'll be watching intraday for a long. I wouldn't short it here because the support's too near below. But as I say, if you're trading on longer time frames, these are the edges that we want to look at. Euro New Zealand. Best place on this is all the way back up here, but here you have multiple reasons as well. You've got, let's just adjust the fib a little bit now. You've got 61.8 fib, so you can tuck your stop behind here. You have the daily 55 EMA, you have a daily trend line. We have made lower lows and lower highs, so we're in a downtrend, and therefore it's of interest to short at 165.90 this week. Issue is this lot is a bit nasty, but if you're looking here, you're looking at potential risk of 48 pips for a potential gain of 130, so you're still getting your 1 to 3 risk reward. Last but not least, Aussie dollar New Zealand. I'd taken it off, I was getting bored with it, it wasn't going anywhere, and it's another one with not a huge average day's move. And then this was the surge in the Aussie, or rather this was the crash in the New Zealand dollar after the interest rate news. 105, multiple reasons why I'm interested to short there. Intersection of a daily weekly trend line, 105 whole number, major previous support and resistance, 78.6 fib just below, made lower lows, and therefore I am looking to short at 105.100. Okay, live session is back to Tuesday as normal. As ever, we will be reviewing what we see and answering any questions that you might have, so try to get along. Catch you later.